Thursday, August 19th, 2021, Monaco 64, home of alternative economics and contrarian views. So it looks like the financial markets, the foreign exchange markets, the bond markets are all getting very volatile. We're going to look at that today. Yes, there is dollar strength, but I don't think that's a good sign. There is also a lot of currencies that are looking pretty precarious. We saw a couple of days ago the Kiwi dollar and the Aussie dollar suffer. We're seeing the pound also come under pressure, and I've been talking about the pound for the last week or so that it looks weak. Before I go into that though, I wanted to say that towards the end of the video today, I'm going to talk a little bit about myself, my background. Of course, many of you already know that, but I get new viewers and subscribers every day, and I have had that question. So wait until I cover the markets, and then I'm going to briefly talk a little bit about my background. For those of you who know me already, you don't have to wait. You can just stop watching. But anyway, yes, yesterday we had the Fed minutes, which is basically the minutes of their previous FOMC meeting, and it comes out a few weeks after it. And the markets watch this very closely because the Federal Reserve is basically a PR organization, as people like John Titus have said. They have very little in terms of arsenal or weapons in their arsenal now, except from printing money. They did try to normalize their monetary policy back in 2017 to 2018, and that was a disaster for the markets because this has nothing to do with the overall health of the US economy. This is all to do with Wall Street and bailing out the banks, bailing out the institutions that use the banks, like hedge funds and others, private equity. It's all based on loads of credit, leverage. What is leverage? Well, it's doing everything on margin. It's how they make their big profits, because they borrow for nothing from the Federal Reserve. The Federal Reserve is a credit and debt junkie, and there used to be a time when the Fed chairman was the one that was supposed to spoil the party, take away the punch bowl, as a former Fed chairman once said. But nowadays, the Fed has joined the party. It doesn't stop the punch bowl coming, but I think we're seeing some signs, and that's what usually happens, has been happening for the last few crises. We see the dollar strengthening and the other currencies weakening. We're seeing that now. We're seeing volatility pick up a bit, the Vix Index. So what did the Fed say yesterday that actually is starting to hurt the markets and create volatility? And you need to understand that these markets are not what they seem. There's a huge underlying casino underneath these markets. It's called the derivatives market. No one really knows what notional amount these derivatives have. Officially, it's like 500 to 700 trillion dollars, but many people suspect it's over 1,000 trillion or over a quadrillion. So yesterday, and I'm going to pick up the FT here, what they wrote about it. It says most Fed officials believe stimulus could start winding down this year. Last minutes show U.S. central bankers divided on pace of tapering 120 billion bond purchase program. So yes, they're doing 120 billion bond purchase, treasuries and mortgage-backed securities every month, and that's what keeps interest rates low. And a market and even an economy that's based on debt and credit depends on cheap finance and cheap credit, especially how big this debt bubble has become. We've got the national debt in the US, of course, approaching 30 trillion. We've got corporate debt also ballooning, personal debt maybe not so much, but it's an economy based on debt and credit. It can't function without it. So most people in the alternative, like me, say that if the Fed started tapering, it would create mayhem. Now it could create mayhem from them just talking about tapering, and that's what I think is happening. So let's just go quickly through this article here, and then we're going to go through the markets and see what's happening in terms of movements and volatility. It says a majority of Federal Reserve officials believe the U.S. Central Bank could start withdrawing a massive pandemic stimulus program later this year, according to a record of their last meeting, the minutes. And this wouldn't even be withdrawing that 120 billion. It would be actually decreasing the amount that they purchase. They'd still be printing money to buy the bonds, but instead of 120, for example, they might lower it to 100 and do it very slowly. It says as well, minutes from the July meeting of the FOMC, or Federal Open Market Committee, showed that officials had accelerated discussions on an eventual end to the 120 billion a month asset purchase program that has been in place since the onset of the COVID-19 economic crisis. I would say government instituted economic crisis. The record showed that Fed officials were inching towards a consensus on when to start tapering its bond buying program, which the central bank had pledged to keep in place until it sees substantial further progress on its goal of average 2% inflation. I'm laughing here, I'll tell you why in a minute, and maximum employment. So why am I laughing? Well, because inflation's running like at almost 6%. So you'd think they'd be tapering already or even raising rates. So as I said, the Fed is a PR institution. They've created a Frankenstein in the financial markets, and they're going to have trouble, I tell you. And the markets are not reacting very well to them just talking about this in their minutes. So I'm going to stop right here. And they've got a real challenge ahead of themselves, the Federal Reserve. And the markets didn't like this because yesterday the Dow finished down 382. I think the previous day we were down like almost 500 at one point, and the market rallied and finished down 280. So I would say that the market action yesterday wasn't great. Of course, I'm not saying there's going to be a crash. All I'm saying is that we should expect a lot of volatility, and volatility in the stock market, bond market, and other markets like corporate bond markets and currency markets usually creates a lot of trouble, create one or two failures in the hedge fund world, or even in the banking world. A small bank could go under, or a brokerage could go under. That's why I always tell people, yes, do trade if you want, do have a brokerage account, but be aware that there's a lot of counterparty risk. That's the major thing that happens when volatility increases. So I'm not saying here that the stock market is going to crash. I'm just saying that I expect a lot of volatility. So yes, yesterday the markets finished down 1%, which doesn't seem much, but the way the stock market has just been going up and up and up with very little correction, a 1% correction is fairly significant. So let's see what we're doing this morning. So yes, we're continuing to see the currencies weaken versus the dollar. and we're continuing to see the stock market weaken. Gold and silver, they have come off. They have been under pressure because the dollar has strengthened. But as I see it here, they're picking back up. Right now, gold is at 1782. Yes, it's down 5, but it's been as low as 1774. The pound, for example, though, is down to 137.08, which is quite significant move. It's down about 1/3%. The euro is down about 1/4, and the dollar is up about 1/4 versus the Chinese yuan. So yes, there is a lot of volatility in the FX market. Right now, the stock markets are not doing well. We've got the Dow future down 250 or 3/4%. The NASDAQ is down 110, same kind of percentage move, and the S&P as well, down about 31 points. And I wanted to show you the Volatility Index, the Vix. And I've got a chart here, a 1-hour chart, which is short term, but you can see how it's moving higher. And now I want to show you a chart of a longer term chart of volatility, a daily chart, going back till 2018. And you can see there that huge spike we saw last year. Volatility, the VIX went almost up to 80. That's when we had the stock market crash. That's when currencies crashed against the dollar. That's when gold and silver got hammered. Yes, they could do it again to the markets. Gold and silver could come under pressure, but I think the Fed will not allow this to get any worse. So we're going to see something come out that's going to give them an excuse to, or give the market an excuse to believe that those minutes and the talk of tapering has maybe subsided. But as you can see here, a low VIX index means that the markets are taking a lot of risk. They feel comfortable, investors, speculators. The conditions are quite benign, and you're going to continue to see increased asset price inflation or the bubble continue. It's when the volatility picks up, as it did last year, and as you can see, it is picking up now, but it's a blip on that chart so far. But I think we need to keep an eye on this, and it could get worse. Our strategy, though, of staying outside the market, yes, that's still there. And if you are outside the market, if you've got real money, physical gold and silver, you should be all right. But many of you who are in the market and like to trade, yes, this is a good time. This is a time that provides a lot of opportunity, but a lot of risk as well. You can do really well, but you can lose your shirt as well. Yes, and general commodities are getting hit hard here. They got hit hard last year in March. And this is the feeling I get. The markets are telling the Fed, we don't like this, right? So right now, WTI crude is trading at a 63 handle at 63.45. It's down 2.6%. High-grade copper is almost down to $4. It's down 1.6% at 4.05. So now about myself, before I sign off for today. Well, I was born in Brazil, 1964. You might have guessed, Maneco 64. Yes, I grew up there, and but I went to school, to university in the States. Finished my university degree in Geneva, Switzerland. My parents had moved to Switzerland, and then in 1989. Thereabouts, I started working in the financial sector. I got my my first big job with a fund management firm, or you could call it a small private bank in Geneva, Switzerland, and that's how I got into finance and banking, if you want to call it. My university degree is in international relations with an emphasis in economics. And yes, I enjoyed that. And I remember really well writing research papers at university in Switzerland. And Geneva, of course, There's the UN there. There's a lot of international institutions. And I remember at the time, all the talk back in the towards the late 80s was all about Afghan refugees. And it's ironic that it's still ongoing now, more than 30 years later. At the time, it was because of the Soviet Union, of course, the invasion of Afghanistan in '79. It created a lot of mayhem, like the 20 years of occupation by the West has created in Afghanistan. So very little has changed. And I enjoyed my degree, international relations and economics. And actually, one of my professors wanted me to do a master's. And I thought about it, and I said, no, I want to go and work now. I don't want to keep studying all my life. So that's what I decided to do. And then about 3 years after I started working in Geneva, I was asked to come and work for Cantor Fitzgerald. They're one of the biggest bond brokers in the markets, interdealer brokers they call it. I went to work for one of their government bond sales desk, like treasuries, gilts, not gilts in particular because gilts was a special market at the time, but basically broking government bonds for institutional clients. And what are institutional clients? Well, they're like other banks, they're like hedge funds sometimes. At the time, hedge funds weren't big in the early 90s, but insurance companies, treasuries for big corporations. And after a few years, I moved from Cantor Fitzgerald. I moved into futures and options. I still covered government bonds. It's a huge market, the futures and options market, and derivatives, of course. And my clients, again, were institutional clients. I also started covering Italy a lot. Yes, I was born in Brazil, but on my father's side, my family was Italian, and so I have an Italian passport. I didn't speak great Italian at the time in the early 90s, but the firm that hired me in the futures and options business, they sent me to a Berlitz course, intensive course for about 2 or 3 weeks, Italian. And so that's how I started in the futures market. And then, yes, I was covering a lot of big Italian institutions, financial institutions, for about, I would say, 10 years almost as a futures and options broker. So I traveled a lot to Italy. Yes, I did have other clients in places like France, even in the US, but the majority of my clients were from Italy. And then eventually I moved to different firms, and I ended up at a futures and options brokerage firm called Mint. They were bought out actually by BGC while I was there. BGC is the parent company for Cantor Fitzgerald, which was the company I started out in 1992. And by 2012, the desk that I worked on, the futures and options desk that I worked on, most of that desk was closed down, and that's when I was made redundant. And I tried to get another job in the next few months after I was made redundant in the city, but it was tough at the time. So I decided to start my own business. I bought into a pawn broking franchise and ran that business for about 2.5 years. It wasn't a failure, but it wasn't a success either. I was breaking even, but it was not good enough. So I closed that business down in the middle towards the end of 2014. I tried different things. I tried getting back into the city, but eventually I decided that I would start doing my videos towards the end of 2015. We had moved house, even though I did lose quite a bit of my savings setting up the pawnbroking franchise. we were okay financially, because that's one of the things that I try to do. My wife and I, yes, we do take risks, but they're calculated risks. So that's my background. And what about gold and silver? Why do I talk so much about gold and silver, even though my business was government bonds? Well, because on an individual private basis, I started looking at gold and silver and started buying it in 2002, mainly because of the 2001-2 dot-com bubble bursting. And at the time, I had a private pension and it took a big hit. And my wife and I decided to look into gold, something alternative. And that put me on the road to looking into gold, because once you buy your first gold coin, it's quite amazing. And I'm quite a inquisitive person. I want to know things. I want to know why. And I started looking into gold and what buying those first Krugerrands. They were the coins that I first bought, gold Krugerrands. That led me to look into gold, because I'm pretty inquisitive, as you probably can tell. I like reading, so I really looked into it. And I had a libertarian bent already then, and I learned that gold and economic freedom were synonymous, that a sound money system were synonymous. So when I started my channel late 2015, 2016, yes, I wanted to let the public know about the financial system, and also talk about the financial system pretty much like I used to talk to my institutional clients. But here I'd be talking to the general public about it, trying to educate them on what the financial system really is, because I had experience of over 20 years in that sector. But at the same time, I wanted to show them that the financial system and the monetary system are not fit for purpose, that we don't have an honest monetary system. And that's why, yes, I talk so much about gold and silver. And my goal here is not really to come here and tell you what to do so that you can get rich from the financial markets, but it's to give you a better feel of what it is, and maybe help you as well with gold and silver, because I think they're a very important part of one's savings. So that's my background. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.